Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Tuesday, January 27th, and my name is Raleigh White, and I'm coming to you live from a sunny but frigid day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a focus on the trading pit. Now, he's going to begin today's session by doing a midday market analysis, and he's going to share the top watch list stocks that he's currently looking at this point in time. He's also going to tell us what is the trading pit and what kind of trades does he take in the trading pit? He's also going to demonstrate how he uses his Pro Trader dashboard to find the best pit trades. And then he's going to talk about how he decides to take directional swing trades, directional day trades, and even directional scalp trades. And also, when is the best time to consider taking time spreads and straddles and strangles. So he's got a great agenda today. Once again, the focus here is on the trading pit, the tools that he uses to find those trades, and the various types of trades that he selects. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address those periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, I've opened up the chat panel to everyone, and we do have some ground rules. Make sure that when you post, always be kind and supportive. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. Also, keep your side conversations between yourselves to a minimum so that the rest of us can focus on the education and the information that Roger's sharing, because after all, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, for those of you that joined us this morning at 8 o'clock for Roger's pre-market briefing, you'll note that there were several catalysts that we needed to be aware of. On the chip front, we had several key chip stocks all coming in up 1% into the open. But on the flip side, boy, healthcare was taking it on the chin, where you can see where United Health was down 12%, Humana down 14%, CVS down 11%, all coming into the open after issuing earnings. On the transportation side, we had UPS and American Airlines scheduled to deliver their earnings before the market opened. On the industrial front, we had Boeing and General Motors also giving their earnings before market open. On the tech and the financial front, on the tech side, we had ROP giving their results before market open. And on the finance side, IVZ also before markets open. Now, with regard to the Fed, we note that we had one consumer confidence report coming out today, and that's not a delayed report. And then we noted that the FOMC members are all gathering to start their meetings prior to the press release and the information they'll share with us tomorrow. So, for those of you that are wondering why do we even look at these catalysts and why are they important? Well, from Roger's perspective, if there's information that's either known or will become known during the trading session, but is not yet priced into the market, these are volatility flashpoints that we need to be aware of. For example, if you're looking to go long in healthcare, you might want to second guess that when you see what's happening in the healthcare sector. So that's why we focus on these catalysts to give us a big picture understanding of what is going on. Now, with regards to Roger's large cap pre-market stock watch list, you'll note that he gave us 17 tickers to look at today, 8 shorts and 9 longs. Now, the one thing I need to share about this is that these are legitimate stocks that are in the process of potentially setting up for being a good trade, but they're not ready for prime time yet. So when Roger has something on his watch list, that's what it means. He's watching it and he's looking to see if it's going to give him the kind of setup that ultimately might have him take a trade. And when he does that, those trades will be placed in the trading pit, which we'll talk about more today, and in the other alert services that he has. So once again, 8 shorts and 7 longs today. Now, as far as his pre-market thoughts were concerned, He noted we came into the open that the futures markets were fragmented with the NASDAQ tech stocks significantly higher than the Dow, which was significantly lower. And he said this is going to create kind of like a push-pull environment in the market that suggests that we could have a very flat, choppy market. He also shared with us that the put-call ratio was still in balance, but slightly favoring the puts, nothing to write home about there, and that the VIX was incrementally rising, but was still below that 18 level, which marks the danger zone for us. On the stock front, we noted that the stocks above the 20-day and the 50-day moving average were rising, which is a good thing, and that the momentum was to the upside with nothing of significant moving to the downside. He did, however, note that the bonds were moving lower coming into the open, and in taking a look at the SPY and the QQQ, just as they were doing yesterday, they just seemed to be consolidating right above the 8-day EMA, not knowing quite what to do with themselves. So at the end of the day, he's basically saying, look, folks, the Dow is down 300 and the NASDAQ is up 150. And he says the way these guys are going to duke it out today, it spells a very, very choppy session. He also said for looking for trades today, you've got to be cautious because on the institutional front, he does not expect a bunch of things to happen there because they're going to be waiting on the FOMC tomorrow afternoon. In other words, no sense in speculating today, not knowing what the Fed folks are going to be saying tomorrow. And of course, that focus is going to be on whether or not we have a potential for further rate cut or rate increases as we look at 2026. He also said it's in his experience when you see these kind of market conditions. Once again, I'm talking about the tech markets, soaring and the Dow, being lower. He says it is ripe for creating false moves that can just chop you up. So from that standpoint, just advising extreme caution. So once again, folks, we're delighted to have you here with us. Roger's put together a terrific agenda for today, and his focus is going to be on the trading pit. But he's going to begin by talking or giving us a midday market analysis and an update on the top watch list that were on his stocks. I just shared with you the pre-market stocks that he was looking at. Well, he refines that during the day, and we'll get an update, his midday update. He's also going to talk about or answer the question, so what is the trading pit and what kind of trades does Roger take there? He's also going to share how he uses his ProTrader dashboard to find pit trades, and the focus is going to be on directional swing trades, directional day trades, and directional scalp trades. Those are largely what happens in the pit, but there are some bonuses that come out. For example, when does he look at a time spread and when does he look at straddles and strangles in the pit? And those are bonus opportunities that are terrific there. So he's going to cover all that today, and it's going to be a great session. So, folks, if you have questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, okay? And remember that we do have some ground rules. If you're going to post, please be kind and supportive. Number one. Number two, keep your post to the topic. Number three, no political discussions allowed whatsoever. Number four, keep your side conversations between a few individuals to a minimum because it interferes with the rest of us that are trying to focus on the education and the information that Roger's sharing. Because after all, he's here with us, folks, to give us an edge in the market and to help us become a lot more confident and consistent in our trading activities. And with that, folks, let's say hi to Matt. Matt, how you doing, buddy?
Good. How are you?
You were just furrowing your brow. I saw it. Something's happening. Roger, it's
Uh,
good to see you, buddy. Happy midday. Once again, interesting market situation today. I love the way you described it. Between, what the Dow and the tech, they're going to be duking it out today, which
yeah.
just creates a very choppy market condition. But I think the only thing that I noticed that might be worth commenting on, Roger, in looking at the markets, I noted that, the bonds or TLT are selling off and they're coming right now. They're coming into the, last night's low. But on the other hand, the SPY and the QQQ are up above the overnight high. So we have,
It's
I call that a little bit of a divergence, and I know you
there's
you have a view on that.
Yes, of course. We're seeing we're seeing very clear divergence right now. For example, if you're trading here, I'll show you what I'm talking about. It's actually quite interesting right now. And I'm not big on the Dow. I've never been big on the Dow because the Dow's only 30 stocks, but I like but RSP is the main one. It's only down 0.18 ticks, whereas the QQQ's up almost a full handle and mags are up over 1%. See, we're starting to get some firepower from the mags. So the
Hmm.
mags are distorting things in a good way, but they're distorting things from us. You take the mags away and we're only up, we're flat on the day. You see what I'm
Good
saying?
point. Yep.
We're not really doing anything without the mags. Now the mags, but obviously we can't ignore that. So we do have to pay a lot of attention to what's going on with the mags today. But again, this is a very very conflicted market. I mean, you've got the Dow down almost a full handle. I mean, not three quarters of a handle, and you've got QQQs up 0.88. So 0.88 up and down 0.78. I
Hmm.
mean, you got a lot of friction there. So
Right.
we it's very difficult. It's very, very difficult to day trade this kind of a market. Very, very difficult to day trade this kind of a market because you have that back and forth. Swing trading is fine, but day trading is very difficult. You
Yeah.
gotta,
Agree completely. Yep.
you have to be very cautious, and I'll explain why. I want you guys to understand. I want you guys to actually understand the reason why. There's a very fundamental reason why. As we all know, most of the buying and selling that we're seeing is driven by institutions, okay? And institutions, a lot of them are trading ETFs. And these ETFs, SPY, QQQ, all these sector ETFs, it's very hard for them not to have a combination of tech stocks and blue chip stocks. You see, it's almost impossible for them not to have that. And when they have that combination, what happens is you got a tug of war, right? Because the blue chips are going, no, no, I want to go down, and the techs are going, no, 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 I want to go up, and the ETF does this. So that's the major problem. That's the main problem um, that we're seeing here, and that's what we need to pay attention to right now.
Yeah. You
If
bet.
if everything is aligned together, it makes day trading a lot more easier. But swing trading, it's not a major impact, and it's just something you have to be very mindful of. If you're not mindful of that, if you're not mindful of that, um, then you're gonna lose you're not gonna understand exactly what's going on with the market, and
Sure.
that's not what we want. All right, so let me just move some things around.
Also, just as a commentary, noted coming into the open that the healthcare companies were taking it on the chin this morning.
Yes,
You know,
they are
that
taking it.
sector, after the earnings came out for United Health and CVS and others. Wow.
Not doing well at all.
Nope.
Although some healthcare companies, for example, uh, if you look at J&J,
Yeah.
they're making all-time highs right now.
Bit more
If
diversified, I think. Yep.
you look at BMY, actually BMY is taking it under the chin. You're right. I didn't have it on my afternoon. Yeah, let me cross it out. Yeah, but you're right. You're right. A lot of them are taking it, really, really taking it. Right now, and we're going to talk about this today. We're going to talk about I think, hold on one second. Let me just make sure I'm on the right track. I want to make sure that I am 100% the right track. Okay, that's
Let's
what I
avoid
thought.
that third rail.
Yeah, I wanted to make sure I'm on the right track. Okay, so we are going because we went back and forth this morning with what I wanted to teach you. And yesterday I gave you top stocks, but today we're going to talk about how I find those stocks, right? It's very important to find, or actually, yesterday you gave me your favorite stocks.
Yep.
Today, I'm going to find you some stocks that we're getting on the pit. And let me just close this out here. I don't want to get interrupted.
And that was a great session yesterday, Roger. I mean, it was a whirlwind. Let me do a count here. We went through 45 stocks that were
Yeah,
served up by the folks here, and by and large, they were excellent selections.
I'm turning the volume off on my other computer so it doesn't make a ruckus while we're doing this. I don't want to be interrupted.
Okay.
So I have a lot of
And,
computers with a lot
folks,
of
let's keep the
sounds.
side chatter to a minimum now, okay? Let the rest of us focus on what's going on. We know it's cold. We know there's snow and you're shoveling. We get it. Let's focus on the markets.
All right. So as far as the broad markets are concerned right now, let me just start out with the overall structure. We couldn't be looking better on a swing term basis. Okay. This is very nice. This is a very attractive pattern. I told you yesterday, I told you guys yesterday that we're building an A line on the SPY. And I
Right.
told you guys if we can overcome this, we're looking really, really nice. This is a very high probability position that we're in right now in terms of the market. This is very, very attractive. Okay. The problem we have here is we're getting near the highs, but we still have quite a bit to go above us. And we have one other thing that we did not have before. We have earnings. We didn't have earnings over here. We have earnings and we have FOMC tomorrow. So the market has the potential to really, really move the next 24 hours. Okay. Now, remember everything. It's a double-edged sword. And also what I was saying this morning about the SPY and the Dow, I meant this type of motion for intraday price action, not over the next 3 or 4 days or whatnot. So just want to make sure you guys understand that. Ronald says best scalp in a couple of months. Excellent, excellent. Good. So happy to see that. So I like this. I like this quite a bit. What I want to see today is I want us to keep our strength over here. Okay. I also like the fact that mags are starting to show some strength. Money's coming into mags before earnings. That's a very positive sign. So I don't have anything bad to tell you, anything negative to tell you. That's the SPY. QQQ right now, the QQQ is nicely breaking out. Look at this. Above the 8-day. This is very nice. We're not overextended yet. We've got plenty of upside potential here. This is very, very nice looking at this point. Let's look at SMH. It is a beauty. Oh, by the way, remember 3 days ago I told you we're going to hit the overextended area and we're going to come back down to the 8-day EMA,
You did.
and we came down to the 8-day EMA, and we have again an A line. That's an A line right there, guys. It's very, very nice. And right here you have an A line, and right here you have an A line. Notice what happens on the way up, except when it falls apart, you get a really nice A line right here. Okay. All right. And this is following, semiconductors are following price action very, very nicely. They're just consolidating over here, not really doing anything. Yeah, you're right, Alex. It was kicked by Intel earnings, but it's looking pretty good here. Looking pretty good. Correct me if I'm wrong, but I believe we have Texas Instrument tonight. I'll check right now. I have it right here. Yes, we have Texas Instrument tonight, and let's just look at the price action on TXN. That's TXN on a daily chart. Look at
Hmm.
that. That's, I mean, that's very nice.
And
Very,
it's
very,
really bounced back, Roger, there earlier,
yeah,
a couple months
yeah,
ago. It was one of the laggards in the
yeah.
chip sector. Yep.
It's doing a very nice recovery. If you're swinging it, this is the next area right here you got to be concerned with, or near, somewhere right here. That's the area you got to be really concerned with. If it can overcome this area right here, you've got a good shot at all-time highs. But
Hmm.
you're absolutely right. Look at that nice V recovery. What's not to love about that, right? Great company. I mean, overall, they are still a they're a major player.
Solid. Yep.
Hmm. Yeah, this is a good like S&P 500 stocks that you can buy for the next 20 years, and I think you would be okay with that. Okay. All right. So as far as the overall market, I'm not at all bearish. I'm not bearish. I'm slightly bullish. My only hesitation is earnings work both ways. Earnings work both ways. You've got you've got we can see a lot of volatility. But overall, I'm going to tell you, if you play cards, this is about this is very nice right here. Very,
Roger,
very
quick
nice.
question on that yellow line there. Is that the VWAP?
No, no, no. You can't put a VWAP
On
on a
a
daily chart.
on a daily.
This
Okay.
this is the VWAP.
I
This is
got
the
you.
5 minute chart. This is the daily chart. Now you can put an anchored VWAP, but it's not the same thing as a VWAP. VWAP, the word VWAP just starts at the beginning of the day by default.
Yep.
But this is just the 8-day EMA.
Okay. Just the 8-day EMA.
Yeah,
Okay.
and by the way,
Yep.
a lot of folks out there use the 5-day simple MA, like real professional folks who've been doing it longer than I have. Like guys who are sharks, which very much similar to this. They're almost, if you put the 5-day MA versus the 8-day EMA, they're going to be like best friends. They're going to be
Yep.
lovers. They're going to be on top of each other most of the time. So it's not that much of a difference. I just like to use the 8-day because it gives you a little more upfront move, a little more reactive movement up front. You
Great.
can't go wrong with either one. So I'm just throwing that out there. But again, my concern is right now still for the fact that we have divergence between blue chips and tech. But again, that's only on a very, very short-term basis. That doesn't hold over the next couple of days. Okay. So what I want to show you guys today is I want to show you how I find stocks using the uh, what we do in the pit. And again, I'm going to talk a little bit about this. I'm going to explain to you why I'm doing this. I'm going to talk about how I'm doing this, and then we can get into the nitty gritty. Okay. And I'm going to close the chat because, well, I'm going to close the chat because I don't want to get interrupted. So the reason I launched the pit 2 years and 2 months ago, or 2 years and 3 months ago, time does fly,
It
was
does.
so that I could show folks, yeah, I could show folks that you could really accomplish things that most folks don't think is possible. It's if you're really good and if you really know what you're doing, you could really like you could take your trading to a whole new level. And I don't mean a whole new level like I'm talking about like a level that people have never seen before. And the problem is every one of the programs I had constraints on it. You know, you can't day trade. You got to do 2 trades a week. You got to do. So I kind of felt like like I had my hands behind my back. So a couple of years ago, I had a theory and I wanted to test it out. The theory was that I thought that we had a lot more people here than the company did, quite frankly, who were really into those fast and aggressive type of trades. They thought you guys were a little more, slow to the party, swing trades only and
In the
overnight.
minority. Yeah. Yeah.
Yeah, 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 yeah. And I said, no, no, no. You wait till I show them this. They're gonna love it. So I said, you know what? I'm gonna do a social experiment. Seriously, I'm going to. It was summer, two summers ago. So I went and I in my free Telegram channel, which you can all have a link at here if you're not in there yet. I said I'm going to do some trades and people can follow them. They don't have to follow them. It's up to them. It's not costing anything. And to make a long story short, I did 160 trades or 180, something like that, some crazy amount of trades. And our win rate was 180 trades. And our win rate over the summer, and our win rate was 96%. And the market was actually going down during that period, and a lot of the trades were to the short side, a lot of the trades were to the upside. I was all over the place, literally. But we had a 96% win rate, and people were like, "If you don't launch this, like, are you insane?
What are you
You
waiting
have to,
for?
right? Well, like, what are you waiting for Christmas? Like, this is how you trade? Like, why aren't like, how come we don't know about this?" So I created a program called the Pit. Okay. And the Pit is a program that I use to express myself on a daily basis. And basically, the Pit has the following types of trades. The Pit has directional swing trades. Okay. The Pit has directional day trades. Um, and most people, and by the way, my swing trades start out, my day trades are always swing trades. So whether you take a day trade or a swing trade, you're taking the same type of trade. Okay. Because I would never give you a day trade that doesn't look good for a swing trade. Then I also do scalps in there, which is something I've been doing new that people really love. And I've been doing time spreads. I've been doing which are calendar spreads. for earnings plays. And we also do, what else we do? We do straddles and strangles. So basically, we do four types of trades. We take advantage of directional market moves. We take advantage of it on the longer term and short term. And then we do ultra short term momentum catalysts. Those are scalps. If I see something coming, um, interesting. If I see something coming, and then we do non-directional trades, like during earnings or during times when Fed announcements happen. I almost did a straddle last night. I may do one tonight in anticipation of the Fed. But basically, I do the kind of stuff that I could do whatever I want. And so far, in the last 2 years and 3 months, we've had over 400 trades. My win rate, they've all been no income. There's no income trades there. So there's no selling options, no naked things, no rolling anything over, no iron condors, no nothing. Just diagonals and straight calls and puts, and that's it. Nothing funny. And straddles and strangles, those are just buying a call and a put and looking for an explosion. That's just level one. So there's no weird stuff going on there. It's very, very straightforward. And I'll show you I'll show you some of the trades that we do there, and some of the trades that I do there. I basically tell people exactly what kind of options to. There's only it's like 50 words. I think we got it down to 50 words, Raleigh. The
Yeah.
instructions for the options,
Yep.
and if it's something fancy like a straddle strangle or a time spread, I give you the strike price because I don't expect you to know that. So it's very self-explanatory. And our win rate has been 94.4 something 5%, something silly like that.
4 or 6 to be precise.
There you go, Mazel tov. And and we haven't had a loser, I think, in over 3 months, 3 or 4 months, something like that. I'm not kidding, we haven't. And we do trades almost every day, sometimes more than once a day. I'm talking about the actual trades. Then we also do bonus trades. That's the trades that I mentioned, the time spreads, basically the issue trades are just directional swing trades or day trades. Everything else is a bonus. So just to give you an idea of the kind of trades we do, um, we've been trading Google quite a bit lately here. So we've been trading. We trade stocks that look like this. We trade stocks that look like this. Okay, we're looking for stocks that are seeing very strong institutional accumulation. Okay, very, very strong institutional accumulation. To give you some more ideas, FedEx. This is a stock I'm looking at right now. Very strong stocks. Okay, very, very strong stocks. And then if I like the stock and I like the volume, this is the Pro Trader dashboard. This is the tool that I used. We released this shortly after we released the pit, or maybe even earlier. I don't remember which one came first. It was over 2 years ago. But they have been the best-selling services, from what I understand, in the history of the pub.
That's correct.
And the difference between the pit and my other services is it's a lot faster. There's a lot more trades. And the reason I created it was because I was bored. No, that was a joke. Not because I was bored. I'm never bored. Trust me, I'm never bored. But the reason I created the pit was because I wanted to show people what was really possible. What was really, really possible in real time. Like what can happen. And that's done is something very interesting. It's caused some people to quit their jobs. And I'm not trying to sell you this right now. I'm being honest with you. To quit their jobs or to grossly reduce their workload and become a full-time trader. So I call the pit my bridge from part-time trading to full-time trading. And I'm accomplishing that goal much better than even I expected. We have a lot of people sending me emails. Oh, by the way, I'm now making, they send me these emails like they're making extra $500. Oh, by the way, I'm making $40,000 a month now, every month
I know.
consistently. Oh, okay, that's nice. Oh, by the way, I'm retired now and my account is up over 1.5 million. Just FYI. yesterday from somebody who posted a testimonial that they were close to 300,000. Now they're at 1.5 million. You know what I mean? Little things like that. I get
Yeah.
testimonial.
I remember the one, Roger, about the guy that's covering his mother's assisted living expenses.
Parents, DJ
Parents
Dave.
taking care of the parents. Yeah, I mean, just amazing.
Yeah, so we get real. I bought my house cash in December. I mean, like, that's the kind. So the testimonials went from like, "Hey, thank you for helping me become a better trader," to like, "Oh my God, I my life has now changed 100%." I'm like, you're trading. So we've gotten really good feedback, really good feedback, and let me show you the process that I use to find the trades that I use in the pit. So I use a tool called the Pro Trader Dashboard, which is right here. The Pro Trader Dashboard gives me on one screen. Now, this is the Pro Trader Dashboard right here, just this part right here, and these two scanners right here. Okay. That's the Pro Trader Dashboard. Now, I have the scanners up so that I could obviously see the chart and everything, and I have a lot of room. And what I put here is just the daily chart. I put my moving averages here. I put all of this is available to you for free. You don't have to pay for any of this. And I just happen to look at these things, and that's all I look at. And it's made my life very easy, and it works very well. I have the 10-day ATR. I have the volume with the 50-day moving average. I have right here the daily chart with the 200, 100, and the 50-day EMA. Matt, we got to change this to a darker color because it looks too much like this.
Okay.
Yeah, this looks like a baby blue, not blue. This is supposed to be American flag. Don't disgrace the American flag. This is blue, deep blue, okay?
Deep blue. Got it.
Deep blue. Don't mess with the American flag. Then I have my 15-day EMA right here. And then I have my yellow is the 8-day EMA, okay? And I use these for support and resistance and stop loss and all that other good stuff. And right here, these are somebody actually emailed me and asked me what that is. This is 1.5 times this, the 10-day ATR, 1.5 times this, add it and subtract it from the 8-day EMA. And I made that available to everybody in the VIP room. Members area. Correct, Matt?
What was that?
You don't even pay attention to half the things I say. Look
Well,
at this.
fingers going
I'm
off
going to
the
start
mirror.
saying some bad things. No, I'm just kidding. I'm just playing around with you. We're going to start testing him, Raleigh. No. This is I'm asking you if you put this in the members area. The deviations, 8-day
Yes.
sink or swim. Yeah, I thought you did. I just wanted to confirm. Yeah, so I'm not. I don't charge you guys for this right here. It's just it's free. It doesn't cost anything. Okay, so by the way, Matt finally put my high volume candles on. Look at that. So this is very good. This is an addition we made to the Pro Trader dashboard. High volume candles and low volume and high volume down candles and high volume up candles right here. Very nice. Very nice. Okay. So right here, everything starts out with my scanner, okay? The Pro Trader dashboard scanner. I press the scan button. And again, it just depends. Yesterday was really slow, but today it's actually working pretty well on my longs and on our shorts. And it'll start filling up. See, it starts calculating right here. Now, during the morning hours, I use the 5-minute. In the evening, meaning before the market closes, I like to use the hourly for overnight trades. So right now, it's actually working really fast. So let's look at longs, for example. Now, I can't have this on the same chart, on the same screen as what I'm showing you. I have to move this so that I can show you what the charts look like. So what I'm going to do is I'm just going to take a screenshot of this, okay? So that you guys trust me, because we can just, refer back to the screenshot. Okay, so here's the screenshot. We'll just go down here, okay? You can see it right here. Anything over 1 means it's stronger than the SPY right now, okay? And this means it's already moving. This hasn't started moving yet if it's in range. And this is the volume, relative volume on a 5-minute basis. Without this, it calculates it really fast, but with it, it takes a little more time, but it's worth it. And this is telling us we're volume. So you have It's outperforming the SPY on a 5-minute basis. Oh, momentum just shifted. That's Alpha Zone Pro giving us the bell, Matt. Up or down, Matt?
It shifted up.
Mm-hmm. Are you long?
We're already long though.
Long? We're what?
We're already long though.
Mazel tov.
Off the VWAP.
All right, so I made a screenshot of this. So I'm gonna move this right here up, okay? And we're gonna look at it one by one, okay? So if you want to take a screenshot so you can look at it with me, please feel free to do so right now, okay? Okay, I'm gonna move it now. Okay, I'm just moving it above me so I could look at it. And here's the shorts. And either you can. These are the weakest stocks right now, in order. And this one actually has volume right here, NFE, NFE. So this is what we're going to look at right now, and then we'll have time to do. I'm not that concerned about shorts right now because the market's moving really well. So I kind of like the long side. So I'm going to move them both, and we're going to look at everything. Now, you may think I'm only looking at the 5-minute because these are 5-minute breakouts, but I need to make sure that the daily looks kosher. Okay, so I'm actually going to make this a little bigger. Okay, now this will tell me right away if this lights up green. This is telling me that volume is really heavy, and this is telling me, excuse me, this is telling me that strength is really heavy on every different time frame. Hourly, daily, hourly, 30, 15, and 5. And this is the volume, relative volume. And this is telling me where we are on a percentage of the day. This thing is indispensable for me. Okay. So let's just take a look. AD&T. And I'm not screening for earnings. I'm not. We're just doing a demonstration. The stock is breaking through 100-day. It's a pretty sloppy chart. Doesn't look that great. Not that exciting. Not overextended or anything, but I'd like to see a little higher than this before committing to something. And the averages are still moving down. It's not a great look. Also, you don't have high volume on any time frame, and actually volume is pitifully low. It should be at least 50% right now or more. Okay, Duke. Duke is below the 200-day moving average. We typically don't buy stocks below the 200 moving average. There's no volume on this stock. It's dead. So just because it's moving well on a 5-minute doesn't mean squat. Everything else has to be pretty. Okay. Lamb Weston. Ooh, that used to be one of our favorites. Lamb Weston. Not really doing anything. Below the American flag, trying to come up, but you got this huge resistance right here. It's bottom fishing. I don't bottom fish. Now, intraday, the stock looks fantastic, although it has no volume. So it's a no. Let's continue.
Roger,
And
it's great that you see that there's no volume across multiple time frames, just at a glance.
yes, yeah, at a glance, it's right.
It's red.
The only thing I wish I could do now is somewhere add volume of the earnings date, because see, on my TC 2000, see right here, I have my earnings date right away.
Okay.
But I can't get 80% of this stuff to pop up. So nothing is perfect, you know? It's like we were talking about. Nothing is perfect. There's always ups and downs. That's what I'm trying to see if TradingView can do everything I want. That's what Matt is working on right now for me. But anyway, I'm digressing.
Yep.
The platform you use should be the least of your worries. Okay, NI. Let's look at NI. Now, this is nice. This is actually really, really nice. Okay. It's nice, very nice. Problem is, it's not above all of this area. See how many times it went up here and broke down? And volume, it's been okay, but not the last few days. So and volume right now is 24%. So I even if we liked it, I don't see any reason. I don't see any reason why we should be looking at it. Okay, no reason at all why we should be looking at it. All right. There's better fish out there. TT. And sometimes what's happening right now will happen where you'll have tons of stocks, and a lot of them look great on an intraday basis, but they don't look good on a daily. And you don't do anything. Below the American flag, right up to the 50. I wouldn't touch this with your money. Okay, TT, let's next. TRGP. Raleigh, with me, you never have to wonder what I'm thinking.
Nope.
Now, this is a very nice daily chart. Not only is this a very nice daily chart, but you're above this high volume. I know I don't know, but I do know actually. This is a very high volume candle, and you're almost above it, or you are above it. Yeah, you are above it. That's a very attractive area to be right now. And it's actually moving okay. You already have your profit targets printed here. Here's your arrow to get in. The problem is it has no volume. It's got no volume. Remember something, folks. We have FOMC tomorrow. The volume on the SPY right now is 25 million. The average is 80. We should be at 40 right now.
Mm-hmm.
We have low volume. Look at yesterday. Look at the day before. We have low volume. When volume is low, that means the market's waiting for something like the FOMC decision, mega cap earnings. Let's see. Maybe. What do you think, Raleigh?
Yeah, no, seriously, just sitting on its hands. And the other thing I want to reinforce to people here, I hope you all understand, Roger's initial focus is on the daily charts. He's
Yes.
looking for a
right here.
great swing trade before he
Yes.
even considers a day trade.
Now, notice something. I've looked at already, let's see. I've looked at 1,
7 or
2,
so?
3, 4, 5, 6, 7. Yes,
Yep.
7. This is the 7th. And I haven't found anything that's getting me hot and bothered. Okay? Nothing. As you know, I'm not jumping out of my chair. This is awful. God awful. I don't care how nice the intraday chart looks. This is awful. I would never touch this. So I put a lot of weight in. I put most of the weight into what the daily chart looks like. Okay. My heater's on.
So,
Okay.
so the point
Sorry
is
about
this,
that.
folks, regardless of whether the stock is outperforming or underperforming the SPY, it's not an automatic trade. There's additional steps you have to take.
Oh, there's a lot of steps. There's a lot of steps. And I do this pretty much all day long for the pit and say, add this to your watch list. Take this off your watch list. I love this stock. Let's go, but okay, it's keying off the 200. This is a big steep slope, not below. Awful, 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 awful. And by the way, the worse the stock is, the more you should learn from it. See, if I found like 10 perfect stocks, you're not going to learn anything from that. Here, you can actually learn something from. Why do these stocks suck? Look at it. So far, notice I don't even look at here. I'm looking here. We're below the 200. We're below the 100. We're basing out. Looks like a nice base, but I want to get it over here. Let's continue. And volume sucks too. On top of that, RMBS. Wow, look at this. Now here you have a pattern we call, what do we call this pattern, folks? Let's see, does anybody know?
You have a bunch of people saying A-line.
Yeah, it's an A-line pattern. Now,
Yep.
I don't love this A-line. Why, Roger? It's bouncing off the 8-day. It made a swing high, a first pullback from a swing high. Volume is pretty good. Why don't you like it? Look at these candles. Look at these are not random candles. These are some pretty nasty candles. It's a big red flag for me. Remember, I want a razor cut. I don't want a broken arm. My recovery is much faster. By the way, if you were to do a survey with beginning traders, they would all 95% will tell you that the opposite is true. They would all want big pullbacks. Big pullbacks usually lead to continuations in the direction. So you see, you have to keep an eye. Now, if you're doing this with me right now, and you're saying to yourself, shit, Roger, I'm not picking up hardly any of the stuff you're talking about. Well, then you should be coming here more often. You should be spending more time with us because we go through this stuff every day. Every single day. Let's continue. RTX. All right. Oh, wow. Look at this. Okay, now we're getting somewhere. Now I'm getting really, really, really excited. Okay, why am I getting excited? Okay, let me tell you why I'm getting excited. You have a beautiful daily chart, like a sexy. Look, no overlap. You gently went. This is not a huge volume. Do you see these volumes everywhere? It went down to the 15. It bounced very nice, and now it's coming back. That is a classic A line, Matt. By the way, that is a very nice A line. Let me see when earnings are coming out. Oh, earnings already today. Today after the close.
Looks like it. Hover over it with your mouse. The red circle.
The red circle. What circle?
Towards the bottom of your daily chart. Or that one.
Oh, right here. So this means afternoon, right?
Click on it. Is it not popping up for you?
Hold on. The company's website popped up for me.
Oh, hold on. I'll tell you.
That's a beautiful chart. So let's just but you go ahead, continue. But you do your thing. But you let me when earnings
already happened this morning.
Already happened. That's very nice. So look.
But that's nice that the earnings are on the chart.
Yes, that is nice. That's very good. So 107%. Is the day already over? No. We're only about halfway over. How's volume on this stock? It's very, very nice. How's volume been every day lately? Above average. This is good. This is good. And we're moving up through the VWAP. We broke down a lot of high volume candles, and now we're moving back up, and relative strength is outperforming the market. That is a beautiful swing trade right there. Okay? That is a beautiful swing trade. Now, sometimes, no, not sometimes. Once in a while, we'll find 3, 4, 5 that look like this. But generally speaking, this is really nice. This is like a 9.5 out of 10. Now, I don't care if this trade makes money, although 94.4% of them do. But I don't care if this trade makes money. What I care about is finding the perfect setup. The statistics will take care of themselves over time. This is what you want. You want a trade that looks like this. You want a daily chart with high volume that's near swing highs. It's a little choppy right now. I probably want to see it break the VWAP, maybe come down, maybe play around here. But I like this stock. I would definitely add this stock to my radar. Okay. Isn't it a beauty, Matt?
It is nice.
And it's got a clean chart. Look. Clean chart. 2-3 days and it comes back up. Look how well this stock plays with the 15-day EMA. 1, 2, 3. I'll bet you if I go back a little bit. Look at that. It trends well. That's a very nice setup right there. It's a very, 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 very nice setup. One that has volume. Matter of fact, I'll show you something. That's the screenshot that I took, right?
Yep.
Here it is on our screenshot. Here's the relative strength, 3 times stronger than the market. And look, it's got volume. Volume. 2.76 higher than the average right now coming in. That's a strong move. That's very, very nice. This is a very, very nice look. Okay. So that's kind of, and let's look at a few more. Now, let me see if I could find some to the short side. By the way, Raleigh, I do not have the chat open. Are folks
sure? The
value?
one key question that came up, Roger, that I'd love for you to address before you move on, and it has to do with earnings. And the question was, Roger, is there a situation where you would consider trading earnings? Just hold on to that question and address that, because I know there is.
Yeah, I trade earnings all the time using time spreads.
Mm-hmm.
I trade earnings. We're probably have an earnings trade today or tomorrow using time spreads.
And maybe once again, as time permits, maybe you could explain high level what a time spread is.
This is
I don't want to
what we do.
interfere with what you got
No.
going on, but that's one key question that I've got here. Mhm.
No, it's fine. It's fine. You know what I'm looking at right now while we're talking? I'm looking at this asset, this ProShare Ultra Short Silver. So if silver goes down, this thing goes up, and it costs only $1.94. I'm going to post this for people in my Telegram channel. This is something interesting. Here, For all you frisky silver traders, check out inverse ultra short silver ZSL.
Yes, several people have already spoken up that they're in that trade.
Cheap way to take advantage of silver.
Our frisky members.
Yes, of course, for the frisky members, right? We obviously have some frisky members in. Anyway, just FYI. Anyway, so you could see the Pro Trader dashboard at work, and it's spitting out trades for me, and it's telling me in real time where the volume is and where the price is. And in the end of the day, what I like to do is, and I'll talk about time spreads in a minute. And in the end of the day, what I like to do is I like to look at the hourly. So I like to look at the strongest stocks or the weakest stocks using an hourly and then hourly volume to see where volume is coming in real heavy. And those trades make fantastic end of day swing trades for the next day. We do that as well sometimes. So let me explain to you what a time spread is. Matt, somebody give me a couple of stocks that are reporting tonight after the market closes. Texas Instrument, right?
Yep.
Okay. All right. Look, after you do this, you'll never trade earnings the same way again. So right here, okay. These options expire on Friday. These options expire next Friday. I'm going to repeat that. These options expire in 3 days. These options expire in 10 days. This Friday, today's Tuesday. In a few days, they expire. They're worth nothing. And these expire the following week. If you look at here, you will see that implied volatility on the options that expire in 3 days is 90%. The implied volatility on the options that expire the following week is 53%. Can somebody here who's smart tell me the variance between 53 and 89, basically between 54 and 90? Who wants to be the volunteer? What's the variance in these? Going once, going twice?
Not
About
27.
About
Nope.
one.
There we go.
1.6,
37.
No,
The IB ratio,
percentage. I want to see what's the difference in percentage. How much higher is 88 than 53, percentage-wise?
70%, roughly.
70%. Ooh. Wow. So you're telling me that these options are 70% more expensive than these? And you're telling me that they expire in 3 days. Now, why are they more expensive? Because tonight, after market closes, you're going to have earnings. So these are all the frisky folks who are speculating on whether or not Texas Instrument is going to have a huge move, right? That's what all these folks are doing. That's why it's implied. It's in the price. So it's driving these options 70% more than these. Okay. Now that we've established this, okay, see 88, 53, 53. Tomorrow, I'm going to make a prediction. These options right here, are going to their implied volatility is going to be 53% too. And then next week it's going to be in the 40s. So these are about twice as expensive as these. Okay, so so Matt, tell me now how often Texas Instrument underperforms expectations. Basically, we're going to figure out right now how often these people are wrong in the last
84.5%.
So 84% these people are getting taken. Right?
Correct.
Okay, just wanted to make sure in the last 20 quarters.
Mhm.
So if you would have bought an option on Texas Instrument before earnings, your odds of making money are 16% based on the last 20 attempts.
Yep.
Ah, you see, it's good to know this information. That's in data miner. Okay. So basically, I've explained to you mathematically that only a sucker would buy these. Mathematically, because your odds are 16% that they're going to go beyond what's implied in this value. Okay. And I'm not talking about opinions right now. I'm talking about a mathematical facts. And when you talk about facts, you should talk with authority because you're talking about math. So you could see that they're 70% more overpriced, and you could see that, and we know because we have data miner that in at least the last 20 quarters, that these people have been taken to the cleaners 86% of the time, because we have data that shows how many times the earnings actually beat their expected move, and the expected move is priced into these options. So what is a normal prudent person to do knowing this information? Sell the crap out of these options. So if I go and sell the 190, where is this trading? It's 197. So if I go ahead and sell the 195s, I'm going to get $7.66 for them, right? But then I'm naked. I don't want to be naked. I don't want the whole world seeing me naked. So then I have to go and I have to hedge myself with these 195s that expire in 10 days. So let me get this straight. I'm selling the 195s and I'm buying the 195s. Okay. But how much am I paying for these? I'm taking in 766. How much am I taking? That's my credit, 766. What's my debit? 822. What's the difference between 822 and 766? Uh, 67 cents, right? Am I right? I can't see the chat. I'm just using my head.
60 cents is what Hannah says here.
It's it should be 44 plus 25 is 67 cents specifically. It should be 67 cents. So how much do you pay for this delicacy? You pay 67 cents. Okay. All right. So you're telling me you get to keep this option and you paid 67 cents? Yes. So earnings come out tonight. But boom, bang, the fireworks, everything happens, and Texas Instrument doesn't go anywhere, which happens 86% of the time. Okay. These options, let's just say we're going to open right here where we closed. This option that costs $7.57 is going to cost $3. And this option is going to cost $5, maybe $6. The disparity between them will be about $1.50 to $2. You paid 67 cents. That's 300% return. That, my friends, is how you trade earnings. And that's the only way you trade earnings. Okay? You take advantage of all the suckers that are buying the option for a very, very expensive premium, and you sell it tomorrow. You sell it today and you buy it back tomorrow. And you hedge yourself with this one. So if the world explodes and Texas Instrument goes to 2,000, you're completely hedged. If Texas Instrument drops to $1, you're completely hedged. Now, I gave you the most simplistic explanation for this humanly possible.
But it's not any more complicated than that.
No, it's really that. That's basically you're selling expensive options you're selling highly inflated options to suckers, and then you're hedging yourself with the cheap option that expires in 10 days, that doesn't have all that implied volatility connected to it. A little bit, not too much though. Basically, for every dollar this declines in price, this declines 15 cents, 10, 15 cents. And that's what we're looking for. Now, give me another stock that's coming out with earnings tomorrow that has weekly options.
Let me see. I think STX.
That's a doozy. Okay. Implied volatility. Where are we? 375. Implied volatility is 150. 150. And what is the implied volatility 10 days out? 100. Last time I checked, that's 50% more. That's my threshold. It has to be at least 40% more. Matt, how often does STX beat on earnings?
Don't know if we're going to have that one.
Speaking of which, didn't he create the scraper already?
79%.
He's done with the scraper, right?
Not all the way.
Well, all right. Okay, so it underperforms 79% of the time?
Correct.
Okay, so 79% of the time, STX doesn't go anywhere. 21% of the time it does. This is at least on the last 20 quarters. So anyway, that's the other thing we do in the pit. So these are bonus trades. They don't count. I'm not even counting these. The majority, the bulk of the trades, and these only come up during earnings. The bulk of the trades is directional swing trades and day trades that fit my criteria. We do a lot of cool trades there. We have not had a loser in the last 45 trades. Those are all swing trades and day trades. The majority of the folks keep their trades overnight as
Yeah, 80% or more. Yep.
80%. We did survey. By the way, Raleigh and I, or actually no, Matt and I did a survey a long time ago in the pit to see how happy people were. And 170 people replied back, and the satisfaction rate was 98%. Now, what's interesting is this survey was done about 2 years ago, and our win rate has stayed exactly the same. Nothing has changed.
Right.
Hasn't, as a matter of fact, it went down to 94.2%, but then I quickly took action and brought it back to 94.43%. It sounds silly even talking about this stuff, but it does very, very well. All right, so I'm going to. Do we have any questions before we move on?
I was just going to say, Roger, you covered the major things, and I just want people to know this is that, as Roger said, these are bonus trades. And when Roger sees a time spread, for example, or a straddle or a strangle that he really likes, he's going to give you everything that you need to place the trade. He's already going to pre-calculate what you should do. Primarily, though, if you're just basically taking a directional day trade or a swing trade, there's a very simple formula for how he applies that. So, and then Roger, I guess the only other thing that you do as a bonus is these scalps that you started doing, which are
Yes.
bonus trades.
And sometimes straddle strangles on the
Yeah.
SPY, but those are long straddle strangles, not short, meaning you buy a
Yep.
put and you buy a call and you look for an explosion in one of the two directions. People love those. Those are. Can you open the door, Matt, and hook me up? It's hot in here. The landlord, when it gets hot, he turns on the heater and it's unbearable. I'm so sorry about that.
No problem. But there was a related question that just
Yes.
popped up, and I'm glad that I think this was Perry asked the question. He says, so Roger, what happens, for example, if STX, beats earnings? Just, they're in that 21% range where they basically outperformed expectations.
Well, there's two things you could do. You could liquidate your trade because remember, this is going to move up too. Remember, you're short
You're
and long
hedged.
one. You're hedged. So you're hedged. The only problem, and we had this come up the other day, and I'm going to make sure this doesn't happen again, is dividend. You're fine with the move. The move you can just so the worst case. Let me give you the worst case scenario. The short will be exercised, and you exercise your long, and they cancel each other out, and you lose your 30 cents or 40 cents debit. The problem is when you're short and there's a dividend date on the week of expiration, which obviously we can avoid because we know those dates ahead of time. If you're short, you're going to get the dividend. The dividend's going to screw up your trade. That happened to us last time, and I should have been more careful. That's never ever happened to me before. And again, that's a note for myself to check for dividend dates. So dividend dates can screw you up. That's the only thing. The move is not going to screw you up because remember, if you're long, your long is you have a long that expires 7 days after you're short for the same strike price. So how much money do you think you're going to lose there? No, you call your broker and you say, "Oh, my short got exercised. I want you to exercise my long." Or you can press auto exercise that some brokers have. So that's not really the issue. That's not the issue. The worst case scenario is they cancel each other out and you lose your debit that you originally paid. And like right here, for example, right now, 378. So right here, 22.26. 25. You're right. Your debit right now would be $2 and like $3. Your debit would be $3. These are very expensive options, obviously, but your debit would be about $3, and then you can take this for a ride. But tomorrow, if this thing opens at 11 and this thing is at 15, you're good to you're doing well.
And
Yeah.
the
So
other thing
again,
I just want to share with people here is that a key part of this formula, Roger, was what percentage of the time does it meet or exceed expectations going back 5 years? And folks, you can't find that anyplace else.
No,
That's
no.
in one of Roger's programs called the Data Miner. And Matt
Yeah.
was just quickly looking at it and going like, "Hey, Roger, 79% of the time, you know, it does not, it does not work." And so, once again, those are key factors. The point is this, guys: when making a decision on how to do a time spread without that factor, it's too risky. Roger, would you look at a time spread if you didn't know the percentage of time that it met or exceeded expectation?
No, of
No,
course not.
right?
No, no. People are funny. I'm going to buy Tesla calls before earnings comes out. Do you know how
Based
often
on
Tesla
what?
beats expectations?
Yeah.
Matt, can you tell us that number? Just to show you an illustration. Remember, that number is implied in the price of the option, right? So it's priced in, which is why those options are 50% more expensive, or the calls and the puts.
81.4.
So it only outperforms 19% of the time. Do you want to take those odds? That I wouldn't take those odds.
No.
No. Now, if it was like the opposite, 81% beats expectations, I'd be buying a straddle right now. I'd be buying a call in the put, because then the move is going to be more than expected 80% of the time. You have a great long trade. By the way, I don't want you guys to get too caught up in this time spreads, because these are just bonus trades. These are just bonus trades we give. So for every 50 or 30 regular trades, directional trades, we do one time spread. So
Mhm.
don't get like caught up in the time spreads. They're just bonus trades.
Yep.
Those are not even counted in the 400.
Mm-mm.
These are the type these directional type of trades, these explosive trades. Those are the type of trades that we do the majority of the time.
You
Any
bet.
other questions before we move on?
No, I think that basically covers it, because once again, Roger, you made a point on the Pro Trader dashboard of wondering to know where earnings was. And that just precipitated a discussion about, hey, how do you trade earnings? And you just shared a way that you do it. And that is a bonus trade. So there we go. And folks, for those of you that are with us on the YouTube channel, we're going to be closing YouTube because we're about to do a presentation on the trading pit. And if you'd like to be a part of that, just come on over. I think Matt's going to put a link there for you to join us. And Roger's going to do a much deeper dive into the trading pit at this point in time, folks. And a number of your questions that came up